Thank you for joining me for the March 2026 Mergers and Acquisitions Analysis in the Beverage Alcohol Industry. Key events. The dominant story in March 2026 is the confirmed merger discussions between Pernod Ricard and Brown-Forman, which would create a $30 billion global spirits powerhouse, combining iconic brands like Jack Daniel's, Jameson, and Absolut Vodka. Multiple sources confirm this potential merger of equals would rank as the second largest spirits company globally after Diageo, combining Pernod's international distribution strength with Brown-Forman's American whiskey and tequila portfolios. Both companies emphasize significant operational synergies and geographic balance, though they cautioned no definitive agreement has been reached. Market reaction was immediate, with Brown-Forman shares surging over 20% on the news, reflecting investor optimism about consolidation in a sector facing declining sales and demand pressures. The distribution landscape saw major consolidation activity, with two significant deals involving Southern Glazer's Wine and Spirits. The company announced agreements to acquire Eagle Rock Distributing Comer's Colorado operations and Claire Rose Inc., the leading beverage alcohol distributor in Long Island, New York. The Eagle Rock acquisition is expected to close in summer 2026 and will add high-profile beer, hard beverage, and energy drink brands to Southern Glazer's portfolio while expanding its Colorado footprint. Separately, Reyes Beverage Group announced its largest acquisition to date through purchase agreements for Republic National Distributing Company, RNDC, assets across 11 U.S. states and Washington, D.C., pending regulatory approval. These distribution deals signal continued consolidation at the wholesale tier of the three-tier system. Molson Coors made strategic moves into the ready-to-drink (RTD) spirits segment with its acquisition of Atomic Brands, producer of Monaco cocktails. This marks Molson Coors' first acquisition of a spirits-based RTD brand, underscoring the beer giant's diversification strategy beyond traditional beer products to capitalize on changing consumer drinking habits and the growing RTD cocktail market. The deal represents a continuation of Molson Coors' portfolio transformation as beer consumption faces structural headwinds. In the technology and e-commerce space, Reserve Bar and AccelPay announced a strategic merger under a new holding company called Vesper Commerce, combining Reserve Bar's luxury marketplace expertise with AccelPay's compliant payments infrastructure. This deal aims to enhance digital commerce capabilities in the beverage alcohol industry by better connecting brands and consumers across channels. Meanwhile, Tilray Brands entered an asset purchase agreement to acquire key BrewDog U.S. assets, including its Columbus, Ohio brewery, pub, and hotel, plus additional locations in New Albany, Cleveland, and Las Vegas, supporting Tilray's regional jewel craft beer strategy. Smaller but notable transactions included Pages Vedrenne Group's acquisition of Mandarin Napoleon liqueur from De Kuyper Royal Distillers, Rocco Winery's purchase of Francis Ford Coppola's Domaine Lumineux Oregon Vineyard Estate, and Fortress Investment Group's preparations to sell Majestic Wine after a 7-year turnaround effort. Additionally, Campari Group announced a $160 million investment to build a second distillery at Wild Turkey in Kentucky, while Edrington took majority control of Wyoming Whiskey, demonstrating continued investment in premium American whiskey production capacity despite broader market challenges. Patterns. The overarching pattern is aggressive industry consolidation, driven by multiple structural challenges including declining spirits consumption, shifting consumer preferences, tariff pressures, and competition from alternative products like cannabis. The Pernod Brown-Forman discussions represent the pinnacle of this trend, but consolidation is occurring across all tiers. At the supplier level, Pernod Brown-Forman, Molson Coors Monaco; at distribution, Southern Glazer's multiple acquisitions, Reyes RNDC; and in specialty retail, Fortress selling Majestic Wine. Companies are explicitly citing the need for scale, operational synergies, and geographic diversification to weather the current downturn, suggesting consolidation is viewed as a survival strategy rather than opportunistic expansion. A second clear pattern is the strategic pivot toward ready-to-drink, RTD cocktails and spirits-based beverages, particularly by traditional beer companies facing declining beer consumption. Molson Coors' acquisition of Monaco Cocktails exemplifies this trend, representing the brewer's recognition that RTD spirits products offer growth opportunities that traditional beer categories cannot deliver. This reflects broader consumer trends toward convenience, premiumization, and experimentation with different beverage alcohol formats, forcing established players to diversify their portfolios beyond their historical core categories. Distribution consolidation shows a pattern of the largest players, Southern Glazers and Reyes, aggressively acquiring regional and state-level competitors to achieve greater scale, efficiency, and negotiating leverage with both suppliers and retailers. The magnitude of these deals, Reyes' acquisition of RNDC assets across 11 states being its largest ever, suggests the middle tier of distributors is being squeezed out, creating a more concentrated wholesale landscape. This concentration gives remaining distributors greater power, but may also attract regulatory scrutiny. Finally, there's a pattern of technology and infrastructure investment in digital commerce capabilities, evidenced by the Reserve Bar Axel Pay merger, creating Vesper Commerce. As direct-to-consumer and e-commerce channels become increasingly important for beverage alcohol sales, companies are investing in compliant payment systems, marketplace platforms, and digital infrastructure that can navigate the complex regulatory environment while meeting consumer expectations for online purchasing. This suggests the industry recognizes digital transformation as essential to future competitiveness, particularly for reaching younger consumers and premium segments. Market direction. The beverage alcohol industry is entering a period of dramatic consolidation and restructuring that will fundamentally reshape competitive dynamics over the next 2-3 years. If the Pernod-Brown-Forman merger completes, it will likely trigger additional mega-mergers as remaining major players, Diageo, Beam Suntory, Bacardi, Campari, reassess their strategic positions in a more concentrated market. The mid-sized spirits companies will face increasing pressure to either achieve scale through acquisition or risk being marginalized by competitors with superior distribution reach, brand portfolios, and cost structures. Industry professionals should anticipate further consolidation announcements throughout 2026-2027, with family-owned companies like Brown-Forman reconsidering independence in favor of partnership to access growth capital and global distribution. The distribution tier will continue consolidating toward a duopoly or oligopoly structure dominated by Southern Glazers, Reyes, and potentially one or two other national-scale distributors. Regional and state-level distributors will increasingly become acquisition targets or face competitive pressure that erodes profitability. For suppliers, this concentration creates both opportunities: simplified route to market, national coverage with fewer partners, and risks: reduced negotiating leverage, potential margin pressure, less flexibility. Brands will need to strengthen their direct-to-consumer capabilities and alternative channels to maintain bargaining power with consolidated distributors and retailers. The RTD spirits segment will see continued investment and M&A activity as beer companies diversify and spirits companies defend their turf. Expect traditional beer players to make additional acquisitions or launch RTD products through partnerships, while spirits giants may acquire RTD brands or launch their own line extensions. The intersection of consolidation pressures, digital commerce transformation, and category blurring, beer versus spirits versus RTD versus non-alcoholic, will create both disruption and opportunity. Industry professionals should prioritize building capabilities in e-commerce, data analytics, and portfolio flexibility while preparing for a more concentrated, technology-enabled, and challenging competitive environment where scale and innovation are equally critical to success.